Cramer. Welcome to Mad Money. Welcome to Cramerica and San Francisco. Other people, my friends, I'm just trying to make a little money. My job is not just to entertain, but to put it in context. So call me at 1-800-743-CNBC. How about tweeting me at Jim Cramer? Maybe our brains are too small. Could that be the reason why we can't get our silly little heads around the need to spend fortunes building out the data centers for artificial intelligence? That's what I'm trying to comprehend as I do my deep dive into the tech world in order to help you make the most informed decisions about all sorts of stocks whose fortunes depend on what comes next in Silicon Valley. The averages often depend on who's meeting who and who's spending what, including today. Dow dipped 17 points. S&P advanced 0.4%. NASDAQ gained 0.66%. The latter boosted by, you guessed it, anything associated with artificial intelligence. Yesterday, I did a core dump on Salesforce. Well, it's making a very big push into the enterprise using its own AI. But after CEO Mark Benioff's keynote speech at Dreamforce about his Agentforce initiative, the stock actually got dinged today, falling more than $3. Ouch! Wall Street's skeptical that Agentforce won't matter to the stock until more business comes from it. I don't know if the stock can turn until AI is driving the company's numbers. But what's not in doubt? How about the sheer amount of what we call compute, the juice needed to power Agentforce and every other application of artificial intelligence? In other words, to get a machine to act like a human or smarter than a human, you need to spend a ton of money on the back end with warehouses and warehouses full of servers, making it all possible. And it's the back end that's the battleground. It's the back end that creates the gating factor for so many to understand what NVIDIA's CEO Jensen Huang calls the fourth industrial revolution. First being steam engines, second, mass production, railroads, third being semiconductors and personal computers. Welcome to the fourth. Those were all tectonic shifts in the way the world works. This is too. Hey, let me ask you something. If you were a seamstress in the 18th century, do you think you could have seen a steam-powered loom coming? If you were a blacksmith, could you imagine the railroads? When you were busy using an abacus, did you think about a personal computer? No, you didn't. You certainly never thought of an iPhone. Some of us lived through the rise of the PC and the internet. It was magical. The fourth industrial revolution, the one that's powered by NVIDIA and now AMD, the one that's being ushered in by the hyperscalers, is still hard for most people to understand. Later in the show, you'll see Rene Haas. He's the CEO of ARM Holdings, wearing some glasses from Meta that are like having a second, smarter brain within your first. Not to be confused with Steve Martin's The Man with Two Brains, which I like very much. You can speak to people in myriad languages. You can take pictures without being an intrusive jerk who whips out the cell phone at the most inappropriate moments that I saw, like, for instance, last night when I was at Salesforce dinner. You can personalize an order from Williams-Sonoma so it knows everything you need. I know what you're thinking, small potatoes. It can't justify the trillions of dollars that are being spent on the data center build-out no matter what. That's why so many people believe this is a bubble. It doesn't help that some companies like OpenAI, the creator of ChatGPT, are spending money on all sorts of equipment that it seems like it's well beyond what they can afford, even if the company comes public with a $750 billion valuation. My best estimate for what if it does IPO, and it might IPO, we just don't know when. It's the cost of the build-out that's turning analysts and hedge fund managers into raving lunatic bears who are growling and pawing at everything in the AI food chain. They think the OpenAI is doing what's known as circular deals, which is a legal way of describing vendor financing, where a company offers money to a customer so the customer can afford to buy what the vendor wants to sell, something that only occurred near the top of the dot-com bubble in, say, 1999 December to 2000 March 3rd. Now, let's go back to the earlier industrial revolution. Let's talk about the rails. When the rails emerged, we had tons of railroad companies laying track all over the place. They overbuilt like crazy with borrowed money. Many of the individual rails collapsed, but the technology stuck around. And once the losers got wiped out, the winners won big. I believe that this is the right analogy for the AI data center build-out. You must ask yourself, would you at the time ever think that your horse would be replaced by an iron horse? Initially, most people said, hold it. So what? So what if it goes faster than my horse? We still end up in the same place. I mean, what's the big deal? I am telling you, this is just the beginning. The build-out will have casualties. So did the rise of the railroads. So did the steam engine and the assembly line and the internet. But the people who built these had a vision like Zuck or Elon or Jensen or Sam or Andy or Lisa or Larry or the whole shooting match. Here's the bottom line. I can't ask you to grow your head. I wish I could. But I can tell you that these people behind the AI revolution, they're not clowns. They're not mompons. They're the best we have. You can question them, but my charitable trust is investing in them. After this trip, I definitely wouldn't bet against them. I'd choose one or two and hold on for the ride. Let's take calls. Let's start with Alexander in Texas. Alexander.
Booyah! Jim Cramer, how are you doing?
I'm doing well, Alexander. How you doing?
Great. Hope those Eagles will get it next week.
The mini buy has helped. I could go into it, but it's just been painful right now. But let's talk stocks so I don't get depressed.
All right. So this stock pays a 4% dividend yield. It's near its 52-week lows. I want to know your opinion about Whirlpool.
It's kind of like the Bengals. Look, there's just not enough. The balance sheet's not that great. They had to cut the dividend. It's exactly the thing I am most worried about. A dividend cut means don't buy, don't buy, don't buy. All right, you can question the people who are heading up this AI revolution. Personally, I prefer to invest in them. On Mad Money tonight, from semis to coffee, I'm taking my time in San Francisco by taking advantage of all the West Coast has to offer. First, I'm sitting down with the CEO of ARM Holdings on the heels of its just-announced partnership with Meta. Then how is the turnaround at Starbucks really going? I'm talking to the coffee chain's CEO to find out. And I'm getting a read on the state of digital banking. Don't miss my exclusive with the red-hot SoFi. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.